What's going on, YouTube family? It's Tamir here, and right now I got a really cool video for y'all. And long story short, I'm just gonna be telling you guys my top 3 ways on how I identify trend within the day trading markets. And as I've been doing my teaching more, if y'all don't know, I have an educational, class called FXE Academy, and I'm just basically teaching students this Forex market now and then. When I just think back just on how to make the market most make sense for you guys and for new traders and stuff, it all comes from just being able to identify trend, For my more seasoned traders out there, y'all know really all we're doing is just picking a side, whether we're buying or selling, and we're just flowing with that trend or that directional bias. So this video is very important, especially if you're a new trader or you're just a person that struggles to be able to identify trend. This video is really important. So if you haven't already, definitely leave me a like right now. If you're not subscribed, go ahead and subscribe. And let's get straight into it. I'm gonna pull the charts up. I'll see y'all there. All right, everybody. As you guys see, we got the charts loaded up right now. And right now we're looking at XAU USD, which is gold. And once again, this video is about being able to identify trend. And just by simply looking at gold, you can tell that the trend has been bullish. There's 2 trends in the market, like I was mentioning in the intro. There's a bullish market and there's a bearish market. When price is in a bullish trend, it looks like this. And it makes points called higher highs and higher lows. At the bottom are your higher lows or just your lows. And they're higher lows because they're higher than the previous low. So this low is higher than the previous low back here actually. And this low up here is higher than this low. So it's a higher low. This could have been a low or a higher low. But then at the top, these are our highs. HH, higher high. That's uptrending, that's bullish market, that's price increasing, that is that type of market structure. Now when price is in a bearish trend or the overall market is bearish, market structure looks like this. This is another trend once again. This is a downtrending market and it's maintained by its lower high points. Kind of really the same concept as a higher low point, but just vice versa. This low is higher than the previous low. This low is higher than the previous low. And these are all lower lows at the bottom because price is getting pushed downwards. Lower high. Now, just to reiterate, these are these 2 trends right here, right? In a bullish trend, buyers are maintained by the higher low points. Once you get a higher low point get broken, then that's a break of structure and you might start seeing lower lows and lower highs being formed. And then on the bearish side, this seller's pressure is maintained by the lower high points. So if at any given point a lower high point gets broken like that and a new higher high is made, then bullish structure will maintain and higher lows will start getting formed as you break. That's a lower high point, break, lower high point, right? Okay. If you guys need some more time on that, pause the video, understand this concept because these are the 2 trends that the market follows. Now, how do I identify trend? Well, for one, I always start off on the daily time frame. Higher time frame bias, you just want to see what's going on these higher time frames. Right now, gold is already going bullish. If you look at the 4-hour time frame and you just look at market structure, we can start drawing out raw market structure. So believe it or not, what I'm about to do right now is probably the #1 thing I do to read and understand the market structure. And it's by simply drawing out the raw market structure using the trend line tool. So I don't know if you caught what I did, but all I do is grab my trendline tool, which is one of my favorite favorite tools to use on TradingView. That's why I started. You click on your trendline tool, you click on this pencil and keep drawing mode button, that's what it's called. And then long story short, I'm just drawing out the market structure. Going from the higher highs to the higher lows, to the lower highs, to the lows, and just drawing this stuff out. Mind you, when I'm doing this, every time I see a red or blue candle, that is when I am placing this tool. Because when you see either a red or blue candle, it's either identifying price found a support or a resistance, and that's what moves the market. All right, I'm just gonna finish this up, and that is some raw market structure right here, right? Started from this point back here, price is in a bullish trend, price is maintaining its upward structure. People are buying at higher low points, so that's profit right there. People are closing right there. Price comes back down and retests this, or it actually kind of makes a lower low. It actually makes a lower low, so it breaks structure here. And now people are going to look to sell at the lower high point on gold. So these are all these sells right here. Price went a new lower low. This is another lower high right here that ended up getting broken, which turned our bearish structure into a bullish trend. And people bought at that very next higher low point, which is seen right here. People take small buys, and then eventually led off to even more buys, creating a new higher high, and then even more higher lows within the future. Once again, once the higher low points get broken, price will tend to trend or flip the bias or flip the trend. Now you see lower high points and sellers being in control all right here. And then our last break just recently happened last week on Friday. Today's currently Monday. And price is just enjoying this bullish run from breaking our previous lower high point. Mind you, this higher low point at the bottom here, which helped us, which kind of told you, hey, if we got a higher low point, which also this one blue candle right here even broke. So this blue candle alone on the 4-hour time frame is pretty strong. Now, mind you, I draw this type of market structure out on the 4-hour time frame and the 1-hour time frame. So the same way, right now I'm on the 4-hour time frame, but if I wanted to draw out this raw market structure, I could do that on the 1-hour time frame and still help develop the same trend buys, right? Of course, if you are more of an intraday trader, you would like to do it more on the 1-hour time frame, just so you're catching these intraday type of moves. As you see, within all those bullish candles that were here on the 4-hour time frame, there still is higher highs and higher low points being found on the 1-hour time frame. And price is just maintaining, price is just respecting and keep on going. Now that, like I said, that is the first way on how I identify trend within these Forex markets or day trading markets. The second way I like to identify trend is honestly just through this red moving average I have going across my screen. This moving average is a 66 weighted moving average. You can apply this on your trading view at any time by just typing in WMA, clicking the weighted exponential moving average and changing your input to 66. And the psychology behind this is really simple. I'm just scrunching up my screen right now so you guys can just kind of see the flow that it does. But long story short, when price is below it, then price would just tend to be in a bearish trend and would decrease like that. Or when price is above it or riding it, then price will continue bullish. So all this, we'll change it to blue. All this, price has stayed above it, even right here. Now, when I discuss about this 66 moving average tool, I want you guys to remember it is an indicator. Indicators are not supposed to be your main, they're not supposed to be your everything. You feel me? Market structure is definitely first before everything, but the indicator is good confidence. It gives you good confluence to know that you're riding in the right trend. Alrighty, and the last thing that I really love to do to to help me identify which trend I'm in really comes from me being on the 15-minute time frame. And it's honestly just tracking the highs and the lows of candlestick closures. So we're gonna get a little deep into this chart right here. And before I do that, if you guys have not left a like yet, please go ahead and do so. Subscribe, because honestly, this is as deep and raw in the charts as you're gonna see on YouTube anyway. So just like keep coming back, right? But so this is like something I went over with one of my students last night. So if you know anything about a candlestick, right? Candlesticks have wicks and they have bodies. So there's the body of the candlestick. Say if this is a bullish candle, even though we do have a whole bunch of bullish candles on our screen right now, but say this is the body. The full part of the candle is the body. It don't matter if it was blue or red, that's the body. And then as you see at the top of every candle or at the bottom, there is this like, just a line. The line is the wick. There's a low wick, there's a high wick, or there's a low of the candle, or there's a high of the candle, right? Just keep it like that. There's a low of a candle, there's a high of a candle, then there's the body. Price closed. On a bullish candle, price opened low and closed high. And of course, if this was a bearish candle, price opened high and closed low and push price down, right? Now, the way I like to use these 15-minute candles to my advantage, especially when I'm trading during high volatile sessions, let's look at this red candle right here, right? So this red candle right here, if we just mark off the highs and the lows of this candle, once again, the wicks, we have a high right there, we have a low of this candle right here. So we marked off the high and the low, right? And if price breaks above a high, price will go higher. But if price breaks below a low, price will go lower. So I essentially use the candlestick's highs and lows to tell me, okay, which direction or trend price is following. Stay with me. So say if this doji candle wasn't even there, this candle just closed, I would have been saying, okay, is price going to respect the low of this candle, or is it going to break below it? As we see, the next 1, 2, 3 candles respected the low of that support, or the low of this red candle here. It's respected because the body did not close beyond our yellow line. If a body would have closed below the low of our red candle here, then the support is broken, because that's actual price closing. But that didn't happen. We had rejections. We also had another low being formed. This doji created another low for us to follow. Once again, if lows get broken, buyers are happening. So this candle right here that opened at 9 a.m. broke our highs. And this is essentially where I would have executed a buy at. I'm executing buys because, for one, just making it make sense. We broke highs, so price is going to go higher. And more than anything, we broke a lower high, because on the lower time frames, this is a lower high on the 5-minute. And all we're doing is buying at a break of structure and a transition in the market. You can put a buy, when you enter a buy at this type of like trading strategy or trend directional thing, put your stop loss below the previous low and just keep riding the highs and the lows of the 15-minute candle. All right, guys, so we're back. Sorry, phone storage issues, right? But like I was saying, after you have that type of entry and you want to make sure that your trade is still valid, you just track the highs and the lows of the next few candles. So this blue candle right here formed lows right there, and also broke the highs of the previous candle here. So this is our new highs and lows. This doji candle printed above the high, so now we have new highs and also gave us new lows. Like, all I'm doing is tracking the highs and the lows of these candles. Of course, you could be on the lower time frames if you want, like just watching it, but as long as you're making sure that the 15-minute candle closures are the most important, that's what you want to make sure is happening. So modify off. So we got this red candle right here, right? The red candle failed to break above the highs, but it did still make a low. So this is our new low right here. Our lows can move, highs can't move. And then you see these next candles broke above our 15-minute high. Now we have a new high right up here. All these lows within the same candle. And hopefully we get something to where, see, look, this high got respected, but this doji still printed a low, right? So now our new low is right there. This bearish candle closed beyond that low. So we could have closed our buys right here, knowing that price is going to reverse for a little bit. Now we have new highs right here on this red candle, new lows at the bottom of this red candle here. The highs are being respected, so sellers are still in control. Price came back down to the low of this 15-minute candle here, respected. This candle gave us a new low, so we could have adjusted our low there, or our high there, and kept our low the same. And then as you see, this bullish candle right here broke above, so you could have placed the buy right there, knowing that the 15-minute candle broke the highs on the lower time frames. Boom. Put your stop loss at the low. And then just make sure that price doesn't close beyond the new low that this bullish candle formed. And just keep riding. It's the same concept. So this is something that, honestly, I just started figuring out when I started trading gold. Like when I was trading the GBP JPY, I did not know about this concept. But once I started learning gold and understanding how, I guess, just effective the 15-minute time frame is, and just me really seeing what works and what doesn't work, I kind of came across that, you know. All in all, you just keep practicing that. These are some things, like I said, you just got to practice. You got to practice drawing out raw market structure. You don't really have to practice like the moving average much. The moving average is more so just like a quick glance thing. You're just making it make sense as it flows. And then this practice we just did right here, we're tracking the 15-minute highs and lows for my intraday traders. It honestly works. And honestly, the best entries are when it is transitioning and breaking a high or a low, so you can catch all that profit that runs from it. But yeah, man, this is how hopefully you guys have a better understanding on how to identify trends and how to find the trends that go on whatever currency you're trading. Leave a like if you enjoyed. Let me know in the comments any other future videos y'all want to know, or if you have any questions about today's video. And I'm out. I'll see you guys in the next one. Peace out.